किसका?
Thank you, sir. May I request Pranav sir again to kindly present the green certificate to Mr. Raman Chopra, Joint Secretary, Tax Policy Legislation, Central Board of Direct Taxes, Ministry of Finance. Thank you, sir. May I now request him to kindly present the green certificate to Mr. Pankaj Jindal, Joint Secretary, Tax Policy Legislation, Central Board of Direct Taxes, Ministry of Finance. Now I would request Mr. Pranav Sarkar, Chairman, FICCI, Taxation Committee and Partner and National Leader, International Tax and Transaction Services, EY India, to kindly give us the perspective about the proposals in the budget.
Thank you so much. Really appreciate Mr. Vivek Ranjan, Mr. Raman Chopra, Mr. Pankaj Jindal to grace this occasion and to share your thoughts and experiences, perspectives. As we said a short while ago, this has been really a landmark budget. I don't think it will go off our memories for a very, very long time. It's probably one of the finest budgets that we see. Very quickly, the backdrop to the budget. Global GDP and the global headwinds we've spoken about already quite a bit, and I wouldn't like to take too much time. What we would say, however, is that India is one sweet spot in this otherwise very fluid global environment and still remains by far, by a margin, the growth leader amongst all large economies in the world. Definitely of late we have seen some momentum being de-accelerated, and for that certainly what the government has tried to do is very obvious in this budget. Very quickly we'll try to move to the big picture. What the government has tried to do, what the finance minister has tried to do in this budget, as we all know, is one, try and simplify and bring far more certainty and clarity to the law, which is partly achieved by the present finance bill itself and will be far more achieved by the new bill that we will see next week. And I'm sure we all have many questions on this finance bill, which also we will try and take up in this session. Very quickly, the biggest thing that this budget obviously does is puts a meaningful amount of money in the hands of various taxpayers. It's really a government reciprocating the trust that the taxpayers have posed and placed in the government. And now the government is reciprocating by really placing its trust in the taxpayers. We can see increasingly in the provisions of the finance bill that the attempt is to try and trust the taxpayer, whether it is TDS, TCS provisions and they revamp, whether it is finality to some of the proceedings, whether it is updated return and the provisions relating thereto, or transfer pricing and 3-year assessments, and so on and so forth. Of course, the kind of tax savings that we calculated that come up as a result of this budget could be as much as 1.5 lakhs, 1,43,000 at the highest end per taxpayer, which is completely different and refreshingly better than what we have seen previously. So clearly the hope is, like we saw the huge steep reduction in the corporate tax rates maybe in 2019, which was very meaningful again, very significant again, and changed the whole corporate tax mindset. Similarly, I think a similar attempt we can see in this budget when it comes to personal income taxes. Clearly all of it could not have been done together, that could not have been mathematically possible. So I think what has happened is in 2019 we saw big corporate tax reduction and promoting more bigger tax base, bigger tax compliance, and that's what we are now seeing in terms of personal income taxes as well. Very quickly, two self-occupied properties without any further conditions entitled to nil taxes. We are talking of perquisite taxation being revamped, TCS being liberalized, especially in regard to liberalized remittance schemes. In view of the time, I'm really going through it very, very quickly because we want more time with the dignitaries on the dais. So I'm trying to really run through this very quickly. We are told now that a non-resident who will provide services and technology in certain key sectors for setting up electronics manufacturing facility or for production of articles, things in India, goods in India, in that space, will now be taxed based on a deemed income of 25% of the top line, which means that the tax effectively on the non-resident at 38.22% of 25% will be less than 25% of the gross receipts of the non-resident. Key provision to give a fillip to manufacturing of high-end semiconductors, chips and so on in India, I think a great step. Provides far greater certainty and clarity to how their taxation will work in India and therefore incentivizes them to provide this high-end technology and provide the services for setting up of such units in India. Currently, inland vessels were not entitled to the tonnage tax regime, which has now been extended to inland vessels as well. We are now told that, once again, I go to the more relevant provisions. Startups will get an extended period of tax holiday, extended from March 25 to March 30. So new eligible startups will get this 3-year tax holiday out of the first 10 years, even if they get incorporated before March 2030. In case of carry forward and set off of losses, there is a provision which now says that the carry forward period of 8 years will run only from the original year in which the loss was suffered, not from the year of amalgamation of succession. In TDS, the threshold limits have been enhanced in most cases by 2 to 3 times, which is a significant enhancement, including for TDS on rent, which was either to 2.4 lakhs per financial year. Now it becomes 50,000 per month of part of a month, which is 6 lakhs annually. TCS on sale of goods, which was an obvious aberration in as much as there was duplication. We've made several representations, and I think the government, once again, one hallmark has been very receptive. So that goes completely. For non-filers of tax returns, again, this has been a representation that has been made, because for tax deductors or collectors, it was extremely difficult to find out whether the recipient of the income has paid or filed its tax returns or not. So that additional TDS or TCS, which was at a punitive rate, has been completely omitted. There has been a reporting and compliance obligation for reporting entities which will be defined with what will be the format, the kind of disclosures that need to be made in respect of virtual digital assets. As we know, a few years ago, provisions were introduced to tax it as a very special regime. Now reporting and compliance requirements for certain reporting entities have been brought about. PP assessments, we are told, now can be made for a block of 3 years if the taxpayer so chooses at his option. Again, safe harbor rules, we are now told, will be introduced or will be further expanded. So that's again a welcome step. We await to hear for the exact prescription in the rules. Updated returns, as was said in the previous session as well, now we can file up to 4 years from the end of the relevant assessment year. And we can talk about this as well in the course of our deliberations later on. And finally, there have been various provisions in connection with IFSCs, which I will not, for want of time, go through it in greater detail right now. I request my colleague to take over the indirect tax slides very quickly and then leave more time for the deliberations and interactions with our friends. Thank you, sir.
Again, I'm trying to convey rush to we'll have time after the session to kind of go through the questions the dignitaries have here. But quickly, the GST proposals were actually implementation of the decisions taken through the 55th GST Council meeting. So it's not news as such. This was in sense known. We actually discussed during the earlier session the amendment under section 17.5G quite a bit. And now I think we'll just see how that kind of pans out in the future. There is an amendment both in section 260, subsection 61 and section 20. It's almost a kind of a enabling provision whereby there's some ambiguity with regard to ISD on RCM for interstate transactions. So that has been amended. ISD is going to be implemented from the first April of 2025. And I mean, there is a requirement that all of us, get ready for it. There were several amendments that were made to enable the introduction of invoice management system. Amendments made to section 34, 38, 39. This is a very, very important kind of change that is proposed to be introduced and has far-reaching implications in the way tax and finance processes are going to be executed. We'll talk about this a bit more, perhaps get the time later. But again, all the provisions primarily enabling the introduction of IMS has been done through this particular budget, again as per the decision of the 55th Council meeting. On the there is a trace and track mechanism again that has been notified. Primarily, it could be for specified goods, probably for tobacco products. This will enable a further tightening of compliances and reduce the evasion of tax. That's the intention. Some other big decisions that have been taken, some of them have been related to GST to mitigate controversy, as in the case of taxability of vouchers. There is a favorable High Court judgment in Karnataka. The government has been extremely pragmatic and positive by actually amending the legislation to remove any ambiguity related to the taxability of vouchers. So very welcome change there. There has been an amendment to section 107 and 112. Now, a pre-deposit is also required to be paid while filing in relation to penalties. There are certain rules on this particular provision. Perhaps if we get time, we can talk about that on this. But now the penalty will get, we'll have to do a pre-deposit even when the fees are there. And the retrospective amendment in relation to supplier goods warehouse in SEZ and FTWZ. There was some favorable advance rulings and I think some conflicting rulings. Government is kind of done away with that in relation to supply within an FTWZ or an SEZ. So again, a welcome kind of change on the GST. Quickly coming to customs, there was a fairly detailed presentation given earlier, so I wouldn't take too much time. The larger, big significant rationalization of tariff structure has been done on three counts. One is the tariff rate, the way the structure related to cesses that are applicable, that has been rationalized, as also some amount of correction or rationalization related to the tariff where the effective rates are much lower, the tariff rates have been changed. Again, the government's entire activity, and this has been a standard process whereby the government rationalizes and imposes tariffs to incentivize economic value addition within the country. That is continuing. Almost all exemptions which were expiring on 31st March 2025 have been extended to the dates that have been notified, except for one product, which is of Bitcoin, so then bit. two very good changes, which again we can discuss, is the time limit of 2 years for finalization of provision assessment. Some nuances there we might possibly discuss on that one. Voluntary revision of import and export documents, extremely welcome change. The Supreme Court in the case of IPC in 2019 had suggested that given that there was no provision for revision, we needed to kind of go about, for any amendment to the documents, we needed to go about making a change to the, going through the appeal process. This has been simplified. Great simplification in ways to the government for the same. Settlement Commission proposed to be primarily disbanded from 1st of April 2025. Some questions on that will come up. And a material relaxation on the IGCR rules. Time limit for filing has now become which is monthly, is now quarterly. And return of goods, from job work or re-export of goods which have been imported under the IGCR, now an extended period of 1 year, an extendable middle quarter. So I trust you, and thanks a lot for this. And take the question after the presentation. Should I call okay. Mr. Chopra, yeah, maybe. Yeah.
Mr. Kumblika has already given an outline of the changes made both in GST as well as customs. I'd only say that rate structure has been simplified, and from 15 it is down to 8, including 0. One, wherever goods were subject to both cess and social welfare surcharge, SWS has been done away with. That is about 82 items. In the life-saving drugs, 36 new medicines have been added. These attract new rate of duty. There is another list of essential drugs which attract 5% basic custom duty. There again, 6 items have been added. There is another notification which deals with patient assistance programs run by pharma companies, and these are fully exempted from BCD. Provided medicines are supplied free of cost to the patients. Presently, there are 52 entries covering 11 funds. There are 37 new medicines and 13 new programs are supposed to be added. Critical minerals, again, last budget we had, that is July 24 budget, we had exempted BCD on 25 critical minerals. This is in line with government policy on national critical minerals mission. And now waste and scrap of those essential critical minerals have been exempted in this budget. Essentially, the argument is that we should also be recycling these critical minerals, as we do not have adequate capacity in the country, adequate sourcing capacity in the country. Textile machinery, some textile machinery have been added. These details you can find in the budget documents. For integrated flat panel display, there was inverted duty structure where final product was attracting 10% duty, or inputs were attracting high rate of duty. So that rate has been rationalized. Now completely built units will attract 20%, module will attract 15%, and so on. Further down, open cells and touch glass sheet, touch sensor PCBs, they will attract 5%. Lithium ion battery, there is a list in notification 25/2002. There are 22 items which are exempt, capital goods they are used for the manufacture of lithium ion batteries for mobiles and EV batteries. So we are adding another 28 items for mobile batteries and 35 for EV batteries. This is to promote these sectors and domestic manufacturing. There was a demand that there should be a longer period for end-use exemption. You are aware that all end-use exemption have an end date, especially for shipbuilding, because some people who want to invest, they want a clear indication as to the exemptions are going to be there. So these exemptions have been extended by another 10 years. That also includes ships or vessels brought for shipbreaking, handicraft. Similarly, there have been other changes, but I think since income tax has been the star of this budgetary proposals discussions, I just give you the figure. Revenue loss on direct taxes side this year is 1 lakh crore. It's a huge amount. I don't think there would be parallel previous best. I don't know what was that figure. And on custom side, it is more in the nature of rationalization. Our loss is about less than 3,000 crore. So with that, I will hand it over to my colleagues.
Good afternoon. Normally, when we come for such post-budget meetings, so we try to prepare ourselves with boxing gloves and maybe bulletproof jackets and helmets and all, just preparing ourselves for a fight. Because budget में normally कुछ ऐसा होता है जो questions raise करता है, जो filing होती है, उससे हमें जवाब देने पड़ते हैं, and we try to answer as well as we can because policy is required to be made and it is required to be legislated, and very often policy results in more taxes. But this year I was very comfortable in coming. Thanks to the decision. There was no stress. When I got the invite, I just said, fine, it's okay. We go unprepared and take whatever we get. And I think we'll get flowers this time rather than anything else. So, as far as the changes are there, you've already read through them. You're all learned people. I would not like to list out all the changes. But generals, if you see the flow of the budget, it is tax proposals. The tax proposals themselves are very simple. If you go through the entire proposals, you hardly need any questions result in your mind from the proposals. Maybe some proposals relating to transfer pricing or something might raise some queries in your mind. But principally, the proposals per se are very simple. The TDS, we start from the TDS perspective. Just the rates have been cut and thresholds have been reduced. Everywhere that is the position. All across. This was started in the 24th July budget. It's been carried forward. And it's been carried forward in a very, very good manner, in fact. Because TDS actually results in refunds and it's actually blocking the money of the taxpayer. The more we can rationalize, we go progressively rationalizing these provisions, and it results in a better outcome for the government because we have to pay interest on the additional amount which is collected from the taxpayer. It is good for the government that you do not retain more money and you do not end up blocking your money with the government. For charities, I don't think anybody took up the amendment to charities. That is a huge amendment. 95% of our charities are small charities, less than 5 crore turnover charities. And their period of validity of the registration has been simply doubled to 10 years from 5 years. It reduces their compliance mathematically simply by 50%. The other critical change in charities, if you went through it, that simply an incomplete form could lead you to a fair market value under 115 TD. That has been done away with. And as Pranav said in his opening speech, the government is actually very, very responsive. In our interactions with the stakeholders over the last 4-5 years, I have always seen anything which comes from the stakeholders, we put it up, the government actually acts positively on that. For the transfer pricing thing, it was a long standing, but it is difficult to implement in the Indian context. We should realize because transfer pricing in India is a part of the assessment procedure. Therefore, separating it from the assessment proceedings and having a separate proceedings for transfer pricing would actually have complicated matters. That is why in the manner in which it has been brought in this year is actually giving an option to the SSC during the course of transfer pricing proceedings कि भाई मेरे 2 साल के transactions similar हैं, इनको भी वही ALP लगा देना. It is as simple as that. Because once you are doing transfer pricing, the time available to do the transfer pricing for completing that assessment leads to a point of time where 2 financial years have already ended. Subsequent 2 financial years have already ended with the taxpayer. He can very well say that these are the similar transactions with associated enterprises relating to a corporate hierarchy, and therefore let the same rate apply to these transactions also, rather than have a consecutive year after year scrutiny and duplication of the same effort. It is, and if you see subsection 1, it is being actually provided that reference will not be made again, and even if a reference is made again on the similar transaction, it will not apply. So, and the second 2 years will not actually operate as a scrutiny. It is just an amendment in 155 where we brought it in. So they are well thought of changes, and it is all to facilitate ease of doing business. For non-residents, as Pranav spoke, that is a major change, because non-residents keep on supplying services through sending personnel to India and then having them work with the manufacturing community and then going back. They are bothered about creation of a permanent establishment through supervisory fee and other things, installation fee, supervisory fee, that keeps on coming on. And once a fee is established, we are all aware how complicated and uncertain it becomes. The attribution of global profits comes into picture, and everything keeps on grey till your scrutiny is selected, and the AO actually tells you that it is 25% attribution or 50% attribution, or some great persons can even do 100% attribution. So that has been completely done away with. And the rate of tax on gross revenues is less than 10%. What is the treaty rate? Recognize it, inclusive of surcharge, it is less than the treaty rate rendered for services by a non-resident, which is a huge step. Certainty and a step forward. So it is all going to help, and on the inland vessel thing also, that is also a major change, because we are relying so much on our own inland shipping industry is not developing, because they are not getting this benefit of presumptive taxation. Presumptive taxation is always certain. It helps you, it helps us. So we have tried in this budget to make things certain for the taxpayer, focused on infrastructure, startups, IFSCs, that they get adequate time. You see the change there. If you could notice that it is a 5-year extension of time being done this year. That gives you certainty that you can invest for the next 5 years, prepare and invest. That is all. It is not that I am going to just keep it for 1 year, then again think the next year it goes for 1 year more. That is a major change in approach of the government to allow ease of doing business. So I hope it will carry the country forward. It will increase the growth, improve the GDP. That is the focus of the tax policy, and collect revenue. I have not spoken about the middle class benefit, because we are all aware. Okay. Thank you, sir.
Thank you so much, Thomas.
Thank you. In fact, Raman sir has taken you through the entire bill, the way it has been done, and the thinking behind it, the certainty that the government wants to introduce, the clarity, the certainty, the simplicity of the provisions, and also deduction of compliances. And then I would only add this thing, that you have to see it in the context of this, that the government came only in June, and it is only 7 months and 2 budgets. July budget, that was also a huge bill, and again this one also, February 1 budget, that is also a reasonably big bill, and then parallelly the new income tax bill, which is also going to come shortly. So if you see all that, so government is working at the kind of pace at which it is working to bring relief, to bring certainty, to reduce compliances,
to basically put its trust in the taxpayer. So that is the underlying thing, and then that thing you will see in every single amendment that was done in the July budget and even in this budget. So just few of them he has taken you, has taken you to most of the amendments quickly. I don't want to go into detail of that. So one is that updated return. So updated, earlier the scheme was that we used to upgrade that we make some addition and then the taxpayer has to suffer the penalty and prosecution and then he has to go into liquidation. So the updated return that was enabled for 2 years and then we have extended it to another 2 years. So if you see that we have restricted that reopening period from 10 years to 5 years in July. So out of those 5 years, for 4 years clearly you are that updated return has been enabled. If you want to disclose something which you have forgotten to disclose, so then you can disclose it without suffering any penalty and no other kinds of harsh consequences. So similarly, like in house property, the two conditions that have been totally done away with. If you can occupy it, fine. If you cannot occupy it for any reason, just you can claim two properties as self-occupied and one value would be taken as nil, unless you derive any other benefit from it. So that is there. So again, if you see, trust runs through each of the provisions. So whether it is house property, whether it is updated, or in terms of like whether income for a AIF, the securities for a AIF 1 and AIF 2 category, whether it would be capital gain or no business income. So again, there also we have tried to give some certainty to the thing that it would be regarded as a capital asset for AIF 1 category and AIF 2 category. So so my point again is broadly the trust that theme runs to the bill from end to end. So that is what we have done, and that is what we hope to continue in the future. Thank you. Thank you so much, Deepak sir.
Okay. So we can take up questions. Yes.
Honorable Finance Minister, in her first interview after the budget with PTI, said it was easier to convince the Prime Minister about the tax cut compared to the bureaucrats. So, what convinced you about the feasibility of the tax cut?
If you saw that if in fact she is very positive in her statement relating to bureaucrats. She is actually saying that it is their job to be fully convinced that how much does it take to give, how much we want to give. So that is the context in which she was speaking, and she was in fact appreciative of the bureaucracy that at least they put up what is factual in the whole process. And comparing it to the PM, because the question was that was it difficult to convince the PM for this? If that the question was answered, so we were in fact feeling very elated that FM had placed us on such a high pedestal that she could actually refer it in such an answer. We thank the FM.
I can tell you, without their support, we wouldn't have seen the light of day.
Good afternoon.
Sorry.
मेरा क्वेश्चन रामन जी से है कि आपने 12 लाख रुपए के बारे में जरा सबको ही मालूम है, लेकिन ये मालूम नहीं है कि वो 12 लाख के ऊपर 1 लाख रुपया ऐड हो जाने से क्या 12 लाख मिलेगा या नहीं मिलेगा?
हमारे FAQs बिल्कुल क्लियर है इस बात पे। जैसे 7 लाख पहले ऑपरेट करता था वैसे ही 12 लाख अब ऑपरेट करेगा। 12 लाख तक जिसकी इनकम है उसको टैक्स नहीं देना पड़ेगा। 12 लाख 10,000 जिसकी इनकम है उसको 10,000 टैक्स देना पड़ेगा। उसके साथ मार्जिनल रिलीफ दिया हुआ। ऐसा नहीं है कि 12,01,000 इनकम है तो आपको 60,000 टैक्स देना पड़ जाए, ऐसा नहीं है। इस करके मार्जिनल रिलीफ जरूर ऑपरेट करता है, पर ये नहीं है कि 12 लाख 13 लाख है तो सिर्फ आपको 1 लाख पे टैक्स देना है, ऐसा नहीं है। ऐसा नहीं है, आपको रेट्स वही ऑपरेट करेंगे। पर अगर आपकी यदि 12,70,000 तक इनकम है तो इस तरह से इनबिल्ट किया गया प्रोविजन को कि आप 12 लाख जिसकी इनकम है उससे वर्स ऑफ नहीं हो जाए, कि जो 12,10,000 वाला तो 11.5 घर लेकर जाए और 12 लाख वाला 12 लाख घर लेके जाए, ऐसे हमने मार्जिनल रिलीफ को इनबिल्ट किया उसके प्रोविजन। 12,10,000 वाले को मिलेगा, 20 वाले को भी कुछ मिलेगा, 50 वाले को भी कुछ मिलेगा, बिकॉज 12,50,000 वाले का 67,500 टैक्स बनता है, उसको 85,000 टैक्स देना पड़ेगा। रिबेट का नाम इसलिए दिया गया है क्योंकि अगर हम स्लैब ही 12 लाख तक ले जाते हैं तो सब ऊपर तक उस स्लैब का बेनिफिट ले। रिबेट का नाम 2 कारण से देते हैं, ताकि असेसी वहां रिटर्न फाइल करें और फिर वो रिबेट ले। अदरवाइज 12 लाख तक असेसी को रिटर्न फाइल करने की लायबिलिटी खत्म हो जाए। इस वजह से हम रिबेट फॉर्म में हमेशा इंक्रीज करते हैं लिमिट्स और टैक्स लायबिलिटीज।
तो वो जो सेकंड जो स्लैब है वो उसके ऊपर लागू होगा।
हाँ जी, एब्सोल्युटली।
Good afternoon, sir.
Sir, just taking
May I come
this point forward, when we are looking at 12 lakhs, so now, a person has taxable salary income after standard deduction and employer NPS contributions at 12 lakhs taxable. Now he has long-term capital gains after excluding, 1.25 lakh exemption of 4 lakh. Now we all know that 87A does not apply to income taxable at a specified rates. So now in this case, when he has 12 lakh net taxable from salary and 4 lakhs from LTCG, to which the limit of 12 lakh won't apply. So will this kind of person get benefit or he won't get benefit because his total income becomes 16?
आप एक बार फिर से पढ़ें प्रोविजन को, उसमें कुछ क्लैरिटी में प्रॉब्लम नहीं है। हमने क्लियरली इस बार प्रोवाइजो में लिख दिया है कि ये रिबेट उस वहां तक ऑपरेट करेगी जहां तक आपकी स्लैब इनकम का टैक्स बनता है, क्लियरली लिख दिया।
Yes, question 20 we have seen.
एफएम ने भी वही बोला अपनी स्पीच में, जो 87A पे बार-बार क्वेश्चन लास्ट ईयर आया था, लिटिगेशन भी हुई, अब उसको क्लियर कर दिया।
So
it helps some, we gain some, we lose some.
yes.
Good afternoon, sir. Yeah.
One by one.
Yeah. May I come in?
Yes.
Good afternoon. Yeah, I'm from Association of Synthetic Fiber Industry, Natidar. So it's a very welcome move so far the textile and man-made fiber textile also is concerned. Heated fabric have been given a provision recently at 150 rupees per kg. Then in the cotton segment also there is some productivity measures have been taken. Then income tax as well, when it is given enough money, extra money to the consumer.